Hello, this is Ahura. We'll be with you with the global economic outlook in the week ahead, which is going to be the week 43 in 2025. As always, let's first check what we had previous week and what happened, and then we can go forward and check the week ahead. Previous week, while the government shutdown in the United States continued and still continuing in its third week, we didn't have that much data from United States, but still we had some data to watch, but not much. While in other economies, especially in China, we had very important data, which is going to be going to have more important data in the week ahead as well. Geopolitical tensions continues. Yesterday or during the weekend, Zelensky was in White House talking with the Donald Trump right after Donald Trump's phone talk or phone conversation with President Putin, and while they decided to meet in probably next 2 weeks in Bulgaria. So the geopolitical tensions still continues, and we don't know really what's going on and what's happening there, but still we can say that at least till next 2 weeks that we will have meeting between the Trump and Putin. We are not going to have any peace in Ukraine, so at least that war can continue for 2 more weeks minimum. While these tensions continues and the market risk is still high, especially with the shutdown, government shutdown there, and trade war between United States and Japan and China. We had quarter 3 earnings reports in Europe and USA, especially in the United States, and what we saw that so far the banking financial companies, especially the banks, they publish their reports, and as we can see, most of them, including the Bank of America, Morgan Stanley, Charles Schwab, and all of them are almost, they could beat the expectations, and they had amazing reports, which somehow supported the stock markets and avoided of falling more. On the economic calendar, as mentioned in China, we had very important data. Chinese trade data published on Monday, where we saw that the import increased by 7.4%, while the export jumped by 8.2%. That supported the Chinese economy much, showing that the Chinese economy is somehow getting better. These data, don't forget that they are for the September, October, November, especially the numbers usually are positive export and import data from China, especially the export data. Why? Because we're getting closer to the new year, and Chinese export usually in October and November increasing. We had many other data from China as well during the week. Like on Wednesday, we had loan data where inflation numbers, where we saw the inflation at 0.1% increasing in September, and monthly and annually we saw that falling by 0.3%, missing the expectations, but still they are much better than the previous months. Also, we had the loan data. We saw that the loans that the Chinese businesses they got is almost 2.5 times more than previous month. That shows that the Chinese central banks Chinese central bank and government policies to support the economy worked well. In other important economies, we can talk about the United Kingdom, where we saw industrial production, manufacturing production, both negative, better than expected, but falling again. While the GDP also was not so brilliant, the GDP improved by 1.3% annually, less than 1.5% in previous month. This is an August number, monthly scale, and August also improved by 0.1%. Better than July 0.1% fall, but still it's a negative, but still this like it's not such a good and brilliant number. Construction output also increased only 1%. That shows that generally the business condition in United Kingdom is not well and fine. This is while on Monday or Tuesday also we had labor market data Tuesday from United Kingdom, where we saw the unemployment rate increase to 4.8% from previous 4.7%, while incomes increased by 5% and retail sales increased only 2%. Generally, these numbers and these data shows that the British economy not doing well. Other than we had inflation numbers from the most European countries, including the Germany, including Germany, Spain, and Italy, and all of them we saw that the inflation slightly increased, same as the whole United States, whole European inflation, of which we saw on Friday, and we saw that the European inflation increased slightly more than previous months, previous numbers with 2.4%, which is like Eurozone inflation increased by 2.3% for headline inflation and 2.4% for core inflation, showing that generally what we can see here on Friday we had. What we can see here with the members' inflation and whole Eurozone inflation, we can see that the inflation generally can be again in the concern, and we cannot, it is that we cannot expect Bank of European Central Bank to cut the rate immediately. In United States, as mentioned, we didn't have much data. Mortgage rates we had on mortgage rates we had, and also we had the Bishop book published from United States. Don't forget about that. This Bishop book showed that most regions in the regions of the FOMC regions, they are worried about the inflation, slightly about the labor market as well, but mostly they were talking about the inflation. Other data, we had inflation, we had energy market reports as well, OPEC report, EIA and OPEC report and IEA monthly report. EIA monthly report we had this previous week, but generally these OPEC and OPEC monthly and EIA and IEA, both of them, they showed that the inventory is increasing. Same thing that we had in a weekly report as well. Inventory is increasing, which is not so good with the oil price. This is one in OPEC report. Mostly we could see about they're talking about the more demand, more than compared with the other markets expectations. So they can see somehow some slightly more balance between input and output and demand. Yeah, that was the most important data we had previous week, as I remember. In the week ahead, China and United States again will be at the center of the stages. In China, especially on Monday, we're going to have PBOC interest rate decision and monetary policy meeting, where we can see probably PBOC will hold the rates at 3% and 3.5% for 1 and 5 years loan prime rate, while the GDP expected to increase by 4.7% in the third quarter, slightly less than 5.2% in the second quarter, which increased, but industrial production and manufacturing production numbers also been published, which we were expected to see slightly slowing growth there, but still the numbers are positive and fine. I mean, that is not something that we can worry about. Also later in China, we're going to have also the labor market data, retail sales and labor market. Retail sales expected to increase only 2.9% in September, but for October, November, and December, we expect to see much higher numbers. Unemployment rate also supposed to stay at unchanged at 5.3% or slightly ease to 5.2%. Later from the China, will we have any other data to watch or not? Probably not, because the Monday is very important for the Chinese economy. Later during the week, no, we don't have much data from the China, but from the Japan, we're going to have the inflation numbers. The national inflation, which is expected to increase slightly from 2.7% to 2.9%. Day before that, from I would say about the other economies, then I will go back to United States. From other economies, on Thursday, we're going to have the Turkish Central Bank meeting, where we can probably see that Turkish Central Bank to cut the rates by another 2%. However, the inflation expectation for year end increased to 31.8%. And now the market is very serious about the inflation numbers and also the markets and the central bank decision. We have to wait and see what's going to happen here. The minimum salary between the conversation about the minimum salary between the government and labor parties are continuing, and they're talking about the more. So this usually the minimum payments and also the inflation, they're affecting each other, not just one, affecting both, affecting each other. And we have to wait and see what's going on here. But generally, the market about the inflation is likely getting more serious than compared with the previous months. Okay, that's what's happened from what we are expecting from other economies. Let's go to United States, and oh, don't forget about that. That during the week we're gonna have the PMI numbers as well, from especially on Friday. PMIs from most economies is supposed to publish, but since that they're for just like primary data for October, maybe market doesn't watch at them so carefully. But we have to watch them as well. From United States, besides this PMI numbers, which is probably be published or not, depend on the government shutdown, most importantly, we're gonna have the inflation number, which supposed to publish 2 weeks ago, but later they postponed it to October 24th, just like 3 days before central bank meeting, FOMC meeting. Don't forget that we are in a just like dark day, we say, what forget the exact name, what we call it, during just 10 days before central bank meeting, where the members, they are not talking, they should be quiet. They are not allowed to talk publicly about the economic and about the policy. So that's why we don't have a speeches this week. That's why the numbers are very important. They're going to talk more. We should wait and see what's happened. But generally, on the inflation front, we expect the market expecting 0.3% monthly growth for both CPI and core CPI. I'd expect to see these numbers, both of them, around 0.4%. If the market sees the same exact numbers of the 0.3% and monthly and 3.1% annually, which is expected, both of them, CPI and core CPI on the annual scale, to be reached. If the market sees this level or even slightly higher, that can be positive for the gold, for the dollar index, and negative for the stock markets. Can be negative for the gold in the short term as well, but not in the long and mid term. But if the inflation meets the expectation and inflation growth slows, then it can put the pressure on the dollar and support the stock markets. But mostly the risk of the higher inflation is much more than lower inflation. Government shutdown continues. We have earnings reports also to watch. Fintech companies, they're going to publish, including the Tesla, they're going to publish the reports in the week ahead, and markets should watch them very carefully. Mostly because of these geopolitical tensions and the political tensions, ongoing tensions, the market just increased very sharply this week. On Friday, we saw the VIX at almost 28, the level which has not been seen since 2020 after Corona pandemic. We wouldn't see that we have it at this level. 28. The last it was seen at 2020 after Corona pandemic. Generally the market risk is still high, even though it slightly eased from 28 to 20, almost 1 on Friday, but still 21 also is much higher than 14, 15 normal market condition, and shows that the market risk is high. This higher risk in a market just like somehow increase the demand for the safe haven, including the dollar index. Even though on Thursday and Friday we had some correction, but still the dollar index above trading above 98 and still positive. We are still positive about the dollar index. Gold also could appear to new all-time high at 4,200, almost $80. Yeah, we had some correction on Friday, but general condition, market condition is still there and it still continues, and we cannot see any specific reason to say that, okay, the trend is finished and we can expect some correction. Yeah, maybe the technical correction is a different, but generally the market is still counting on a higher levels. On the energy market, after higher inventories in the United States based on the EIE and API reports, and also after the international reports from the OPEC and IEA, we saw some pressure on the oil price, especially with the weaker export and import data that generally we had last week's. Yeah, the Chinese export and import, they were good, but generally the other economies, they were not such a brilliant numbers. We had some pressure on the energy market. Oil price fell under $60, trading around 57. Now we can see the 57 and 56, they can be the support, and probably price will be around these levels in $60 and holding around these levels, not expected to increase high. On the stock markets, with the higher risk in the market and the general condition that is going on here, profit taking and many others, S&P 500, and after especially the Mr. Trump's treat on more tariffs on the Chinese products, So that put the pressure on the stock markets. We had some correction after after shortfall last Friday. Generally, the market still with putting all these data together, market is not still positive too much about the stock markets. That's why we can say that okay, even though this recovery after last Friday's fall, this recovery is kind of we cannot say that it's a long-term recovery, probably short-term technical recovery. And with these numbers and with these data, even though we are positive about the earnings, can put the pressure on the stock markets. Maybe this week that can be less pressure, but we can see this pressure can continue to continues. We can see same almost condition in other markets as well, including the S&P, including the Nasdaq and Dow Jones too. In the cryptocurrency market, also with the higher risk, generally the risky markets, including the cryptocurrencies markets under pressure. BTC could be under pressure as long as it's trading under 113,000 US dollar. Any correction to uptrend can be seen only after reaching the price above 118,000 US dollar. But generally, the market condition for now is negative 104, 105 areas can be the support zone. Falling under this 102 and 98,000 could be the next targets to be sorry, I didn't bring the Bitcoin. Yeah, this is a Bitcoin chart. Will be the next targets for Bitcoin to be seen. These areas for the Bitcoin. This is generally the market condition. What happened previous week and what's happened. What we expect to see in the week ahead. If you had any other question, don't forget to write in the comment section. I'll try to get back to you as soon as I can. Have a good time. Bye bye.